Okay, good morning, everyone. Looking at the US stock market, the Dow has again recovered from the 24,000 psychological level. Since then, it continues to climb higher, forming the higher high and also the higher low formation. The uptrend in orientation formation was established in the mid of July, and recently, after topping the 26,200 points, we did see some of the mild weakness on the Dow Jones as the Dow pulled back just towards the EMA 20 level and forms on the mild recovery and pattern over the past two trading days. On yesterday itself, we did saw, or overnight itself, we did saw the Dow has closed just marginally below the 26,000 psychological level. So moving forward, we are expecting the Dow to continue to just inch marginally higher back towards the 26,200 points. Should this level were to be breached, further upside will be seen towards the 26,600 points level. In the meantime, the immediate support will be located towards the 25,600 points level on the Dow Jones Index. On the broader market, it's slightly on the negative side. Yes, earlier recovered from the 2700 psychological level. Since then, the S&P 500 has hit a new fresh all-time high at the 2916. After hitting the 2916, we did see some of the weakness on the S&P 500, dragged down by the sell-off in technology shares. For now, we will continue to monitor to see how the S&P 500 holds along the 2850. Should the 2850 level were to be breached, further pullback might be seen towards the 2800 psychological level. In the meantime, should there be any recovery above the 2850, then we could see further upside on the S&P 500 back towards the 2900, or even towards the previous all-time high of the 2916 level. So on the US stock markets wise, I think investors will monitor to see how US President Donald Trump move on the tariff for the next 200 billion worth of Chinese goods. He will likely to announce it probably on later tonight or early Saturday or morning. Should the 200 billion worth of tariff were to materialize, then we could see further volatility on the not just the US stock markets but also the global stock markets. On the crude oil prices wise, the crude prices has earlier recovered from the 64 US dollars per barrel mark after forming the double bottom formation. Since then, the crude prices has recovered just towards the 70. It rejected the 70 US dollars per barrel level and subsequently traded lower for the past two consecutive trading days. For now, we need to see how the crude prices holds above the 67, which is currently located at its current support level for now. Should the 67 level fails to hold, then we could see further retracement on the crude prices back towards the 64. But if the 67 were to recover from this point onwards, then we could see further upside on the crude prices back towards the 70 or even towards the 73 US dollars per barrel level. But for now, we expect some of the mild weakness on the crude prices. Somehow, based on our local front, the FMKLCI has again recovered towards near the 1830 level. Subsequently, we did see some of the pullback happens on the FMKLCI as the key index has pulled back for the past 5 consecutive trading days and towards just marginally below the 1800 psychological level. However, on yesterday itself, we did saw the FMKLCI has seen some of the mild bargain hunting activities as the key index also closed marginally below the 1800. For now, we need to monitor to see how the key index holds around the 1800. If the 1800 level were to be supported or to that be a breakout above that, then we could see further recovery on the FMKLCI just with the recovery just limited towards the 1830 level. In the meantime, pullback should the FMKLCI continue to maintain its stance below the 1800, then we might see further retracement on the FMKLCI back towards the 1760. On indicators wise, things appears to be quite negative right now. As you can see that the MACD indicator has MACD histogram and the MACD indicator has already issued a sell signal. over the past two trading days after the FMKSCI has violates below the 1800 psychological level, whereas the RSI could be falling below the 50 level as well. And just give me a minute for the chart to load. Okay, on the lower liners wise, we did see the further selling pressure on the FM or small cap index, as the FM small cap index has again violates below the 14,560 points, and the follow-through selling pressure was noted on Mondays. On Wednesday, we thought that the FM small cap index could recover after a one-day recovery, but the lack of follow-through by interest beyond that has seen the advanced market index gave up its previous session gains, and the follow-through selling pressure on the lower liners was noted on yesterday. So for now, we expect further weakness on the lower liners back towards the 13,600 points level for now. While any recovery will be just taken as a technical rebound, limited towards the 14,500 points on the FM's market index. So should you is advisable for you to hold on to your recent gains, and should any share prices falls below their support level, then it's best to cut loss immediately. Stocks wise, some of the stocks that we can watch out for firstly will be YTL REIT. YTL REIT has earned from the uptrend in orientation formation. The MA 9, 20, 60, and 120 has been in line, and recently we did see a potential short-term breakout pullback and the continuation pattern along the EMA 60 level, as price has really formed a bullish candle yesterday. So for now, for YTL REIT, we need to monitor to see if there's any follow-through by interest beyond the 1 ringgit and 23 cents. Should price breach above the 123, further upside will be seen towards the 128 or even towards a new high on YTL REIT towards the 1 ringgit and 32 or 33 cents level. The stop loss point will be located below the 1 ringgit and 19 cents on YTL REIT. Following yesterday's bullish candle, the MACD histogram has already turned green, whereas the RSI has risen above the 50 level as well. On a power route, price has also formed the uptrend orientation of formation since the mid of July. After hitting the recent high of the 1.65 cents a level, price has been consolidating on a sideways manner over the past two trading months between the 146 towards the 165. For now, we are seeing a potential short-term breakout, pullback, and a continuation pattern as price has found some support along the EMA 20 level that we are expecting price to trend back towards the 165. That will be the immediate target price for now. Should price breach above the 165, further upside will be seen towards the 182. The stop loss point will be located towards the 1 ringgit and 51 cents level, and if you can take further risk, further downside will be seen towards the 1 ringgit and 46 cents on power route. Redmans is a new IPO. Yes, earlier traded lower since the IPO's day in the early of March. After trading lower towards the intraday low of 20 cents level, we did see Redmans has seen some of the healthy consolidation period over the past 4 trading months. Following that, we did see Redmans has experienced the consolidation breakout above the 26.5 cents level, accompanied by some of the improvement in volumes. Following the breakout of 26.5 cents, we did see price continues to form the higher high and also the higher low formation as price continues to be supported along the EMA 20 level as well. Yes, a little more pullback just towards the EMA 120, EMA 20, and subsequently rebounded to form a new high towards the 38.5 cents. Once again, it pulled back towards the EMA 20 level and formed a bullish candle yesterday. For now, we expect a recovery on Wegmans back towards the 38.5 cents. That will be the immediate target price for now. Should price breach above the 38.5 cents, further upside will be seen towards the 40 cents level. Your stop loss point will be located below the 32.5 cents level on Wegmans. Last two company for today will be JF Tech. JF Tech is on a technical rebound phase. Price has again recovered from the recent low of 58.5 cents level after the bullish divergence signal was being formed. Price has been trading lower from that point from early of the year, but the MACD indicator has been forming the higher low formation. Subsequently, price traded on a sideways manner, rejecting the EMA 120. But recently, we did see price has breached above the EMA 120, accompanied by some of the climatic volumes being traded. Subsequently, price pulled back just towards the EMA 60 and traded on a sideways manner. So for our JF Tech, what we need to do now is we're going to monitor for this potential um, it did breach the short-term trend line above the 84 cents level on yesterday. So we're expecting price to trend towards the first target price at the 92.5 cents towards the 1 ringgit and 2 cents level. Your stop loss point will be located below the recent low, which is currently located at the 78 cents. The 78 cents also is level, is also the previous breakout formation. So this could be taken as the breakout, pullback, and the potential continuation pattern for price to trend towards the 92.5 cents or even towards the 1 ringgit and 2 cents level on JF Tech. Last company for today will be Sime Darby. Sime Darby, after adjusting to the special dividend after price has after the company has split between Sime Darby Plantation and also properties, we did see Sime Darby has experienced the recent breakout accompanied by some of the improvement in volumes yesterday above the resistance along the 2.67 cents level. Following the breakout above the 2.67 cents level, we expect price to trend towards the first target price at 2.93 or even towards the 3.04 cents level. The stop loss point will be located below the 2.50 cents level on Sime Darby. Following yesterday's breakout above the 2.67 cents, we are also seeing the MACD indicator has really issued a buy signal, just that the RSI is slightly overbought right now. So for now, any pullback will be a healthy pullback for Sime Darby for us to accumulate around the 2.55 towards the 2.50 cents level before the next uptrend to resume for Sime Darby back towards the 2.93 or even towards the 3.04 cents. If you have any questions, you can put in the chat box and I'll reply shortly. One question here on Persona. Persona has been on a technical rebound phase for after hitting the recent low of 20.5 cents level. We are also seeing a potential bullish divergence signal as price has been trading lower, but the MACD indicator has been creeping higher. Since then, we did see Persona has experiencing a technical rebound beyond the 31 cents level. Following the breakout above the 31 cents, we did see a pullback happens and the continuation pattern was established towards the 36.5 cents level after the company has announced that they have secured one of the construction projects. However, on yesterday, we are seeing the bearish candle was being formed with some of the similar volumes being traded compared to the previous day, implying that the buyers on contra play has most of them has been out of position. So for now, we could expect further weakness on Persona back towards the 31 cents. If the 31 cents level cannot hold, then you have to cut loss immediately on this company. As you can see that the MACD indicator has been turning lower yesterday. Yes, the MACD histogram has actually turned red. whereas the RSI has fallen from the overbought position. So for now, we expect further some of the mild weakness on Persona back towards the 31 cents to see how it holds there. If the 31 cents level can hold, then you have to cut loss immediately. But if should there be a recovery from this point onwards, then gains would likely to be just capped towards the 36.5 cents. That would be the gains would be likely to be limited towards the 36.5 cents level before it stage the pullback. If there's no further question, that will end the morning briefing for today. Thank you.